With us right now is Oliver Sloup. He is with the Managed Futures, the II Trader, and he's out there at the edge of the trading floor at the CME Group in Chicago. All right, Blue Line Futures here with us on Oliver Sloup. Thank you very much, Oliver. Sorry about that. All right, what's your thoughts here as we get ready to go into the close after post-report here today?
Well, I think a lot of market participants, traders, producers alike are just excited to see a little bit of action in the markets. The markets have been dead over the past week or so, and especially that soybean market yesterday. I looked back at the charts. Yesterday's price action in the soybeans was the tightest range since, I think, April 7th of 2016. So broke out a little bit today on the back of a relatively friendly USDA report, and I think there might be some more upside so long as we can close above some of these technical resistance levels. We've been trading in a little bit of a consolidated wedge in that soybean chart. 977 was the breakout point. We're going to want to maintain price action above that. If we can close above 993.5 going into the weekend, I think there's more upside potential. Breakout above $10 with 1014 being the near-term target. Now, obviously, we're going to want to keep a very close eye on harvest here in the States, but I think you're also going to want to pay especially close attention to the weather down in South America as they continue to plant.
Oliver, earlier this kind of all gave a little bit of a lift to the wheat market, but wheat now starting to trend just a little bit lower. Where do we go from here in this wheat market? Because was there much in this report for the wheat story?
You know, there really wasn't. I think a lot of it was just some spillover momentum from the soybean market that had propped up the corn and the wheat market, and there's kind of an old joke around here: buy wheat, live in the street. And we've seen all the rallies really get sold into pretty hard. The 50-day moving average is key technical resistance. We haven't closed above this since the middle of July. That comes in about 447 3/4. Until the bulls can achieve a close above that, the bears remain in very strong control. So we're looking actually for a test of new contract lows near 422.5, and I think we could potentially break down below that sooner rather than later.
Oliver.